The stock market is a dynamic landscape constantly shifting with economic tides and technological advancements. As we navigate 2025, several key trends are shaping market conditions. The overarching narrative remains the transformative power of artificial intelligence, driving significant capital expenditure in data centers and specialized hardware. This has propelled the tech sector, with the Nasdaq reaching record highs. While some near-term volatility is expected due to macroeconomic uncertainties and evolving tax regulations, the long-term outlook for technology and, specifically, the semiconductor industry appears robust. Global IT spending is projected for healthy growth, and AI spending is set for a substantial compound annual growth rate. This environment presents compelling opportunities, particularly within the semiconductor space, which acts as the foundational layer for much of this innovation. Let's delve into three companies poised for significant upside. ASML Holding, ticker ASML. ASML is a critical player in the semiconductor industry, holding a near monopoly on the highly advanced extreme ultraviolet EUV lithography machines essential for manufacturing the most cutting-edge chips. Their unique position makes them indispensable to major chipmakers like TSMC, Samsung, and Intel, who rely on ASML's technology to produce the advanced processors powering everything from smartphones to AI data centers. The demand for advanced semiconductors, fueled by the accelerating adoption of AI, 5G, and high-performance computing, directly translates into increased demand for ASML's equipment. The company recently reported strong Q2 2025 results, with total net sales of 7.7 billion euros, hitting the top end of their guidance. Their gross margin was an impressive 53.7%, exceeding expectations due to higher upgrade business and one-off cost reductions. A significant milestone in the quarter was the shipment of ASML's first TWINSCAN EXE 5200B system, representing a major advancement in their EUV technology. This new system delivers improved productivity and overlay performance, helping customers manage the cost of advanced semiconductor manufacturing with a throughput of greater than or equal to 175 wafers per hour. Their net bookings in Q2 reached 5.5 billion euros, with a notable shift towards logic applications, emphasizing the industry's investment in leading-edge processes for AI. Logic represented 69% of their Q2 sales, demonstrating the strong demand for chips used in advanced computing. ASML anticipates a full-year 2025 net sales increase of around 15% relative to 2024, with a gross margin of around 52%, underscoring their optimistic outlook despite increasing uncertainty from macroeconomic and geopolitical developments. The company's consistent interim dividend of €1.60 per ordinary share and ongoing share buyback program further enhance shareholder value. ASML's strong technological leadership and critical role in the semiconductor supply chain position them well for sustained growth as the demand for advanced chips continues to escalate. Applied Materials, ticker AMAT. Applied Materials is a leading supplier of manufacturing equipment, services, and software to the semiconductor, display, and related industries. As the foundational picks and shovels provider for chip production, Applied Materials is directly benefiting from the industry's massive capital expenditure cycle driven by the burgeoning demand for semiconductors, particularly those used in AI and data centers. Their broad portfolio spans the entire wafer fabrication equipment WFE ecosystem, serving major players globally. The company delivered a solid performance in Q2 FY 2025, with net revenue increasing by 7% year-over-year to $7.1 billion. Applied Materials achieved a record non-GAAP EPS of $2.39, reflecting a 14% increase from the previous year, despite a slight revenue miss against expectations. This robust performance was driven by a record non-GAAP gross margin of 49.2%, the highest since fiscal year 2000. Semiconductor Systems revenue was up 7% year-over-year at $5.26 billion, indicating strong demand for their core equipment. Applied Materials projects revenue of $7.2 billion for Q3 FY 2025, marking a 6% year-over-year increase, and non-GAAP EPS guidance of $2.35, representing an 11% increase. The company anticipates continued substantial growth in leading-edge foundry logic investments in 2025, and also expects spending for leading-edge DRAM to be up significantly. We are seeing an uptick in NAND investment as well, albeit from very low levels. Applied Materials is strategically positioned at major technology inflections that enable high-performance, energy-efficient AI computing. While export controls have impacted revenue from the Chinese market, the company is focused on expanding its market share tied to leading-edge capacity investments outside of China, and is expected to establish higher peak revenue and profitability as the cyclical recovery progresses, with a notable acceleration in WFE spending anticipated in 2025 and 2026. Micron Technology, ticker MU. Micron Technology is a global leader in memory and storage solutions, specializing in DRAM and NAND flash memory. With the explosion of data generated by AI applications, cloud computing, and advanced consumer electronics, the demand for high-bandwidth memory, HBM, and other specialized memory solutions is surging, positioning Micron for significant growth. High-bandwidth memory, in particular, is crucial for large language models and other generative AI applications due to its superior bandwidth and low latency. Micron's fiscal third quarter 2025 earnings demonstrated impressive year-over-year growth, with revenue of $9.3 billion, up 37% year-over-year, and GAAP profits of $1.9 billion, a staggering 467.8% increase from last year. This remarkable performance was driven by all-time high DRAM revenue, including nearly 50% sequential growth in HBM revenue, reaching a $6 billion-plus annualized run rate. Data center revenue more than doubled year-over-year to a new record, reflecting the intense demand from AI servers. Micron is currently the only supplier producing LP DRAM at volume for the data center market, giving them a distinct advantage. Micron is actively ramping its HBM3E12 high production faster than expected and projects its HBM market share to grow to the 22 to 23% level, aligning with its overall DRAM market share, potentially as early as calendar 2025. The company also delivered samples of HBM4 to multiple customers in early June 2025, including key players, and expects to ramp volume production in calendar 2026. This aggressive roadmap underscores their commitment to leadership in the HBM market. For the fourth quarter of 2025, Micron projects revenue of $10.7 billion, implying a roughly 15% sequential increase, with a gross margin of 42%. The company anticipates record revenue with solid profitability and free cash flow for the full fiscal year 2025, while making disciplined investments to build on their technology leadership and manufacturing excellence to satisfy growing AI-driven memory demand. Micron's strong execution and strategic focus on high-growth AI memory segments make it a compelling investment opportunity.